This episode is brought to you by 180 Markets, where it is our goal to bring every individual, fund manager, family office, or any qualified investor access to Australian Stock Exchange capital raises. If you are ever interested in how to access ASX capital raises in a super simple way, 180 Markets is for you. The sign-up process is easy. You just upload your ID, proof of your investor status, and your current brokerage account information. The settlement of shares goes right into your existing account, and you can access our very next capital raise. If you're interested in free, easy access to thousands of ASX capital raises, including placements, IPOs, reverse takeovers, and more, check out 180markets.com.
Hello everybody, welcome to yet another edition of 18 Minutes with 180 Markets. Friends, as everybody knows, this market is running hot. It is truly incredible, some of these companies' movements. But what's really important too is to not lose focus on fundamentals. And with us today, we have a company that really looks undervalued to us with their Gold Explorer right now, soon to be in near-term production, which is more than a lot of companies can say. And yet at the same time, a market capitalization of only $25 million. And here to tell us more about it is Managing Director James Fox of PNX Metals. And with that introduction, James, welcome to 18 Minutes with 180 Markets.
Thank you very much. Thanks for taking the time to talk to me.
Hey, James, everybody wants to know about people. Can you just tell us in a few words your story? How did you get to where you are today?
Sure. Look, I guess as always, it's a bit of a long story, but I'll keep it short. No, look, I went to university a long time ago, studied geology, worked in the mineral processing field, actually not too often as a geologist, but more in the mineral processing side of things. But I sort of worked my way around the world. Started in Australia, actually probably close to 20 years ago from the UK. Then I headed back and spent a number of years offshore overseas as an expat, working with sort of cobalt in Uganda. I was engineering projects over in Eastern Europe. Spent some time in the gold fields and up in the Pilbara in Western Australia, again on mineral processing plants, and then I guess sort of fell into the role that I'm in now.
Great. That is truly, you are a man for all seasons.
Yes.
Without a doubt. And, I guess, maybe coming back now here or home, if you will, can you just tell us a little bit about PNX? It's a gold and base metals explorer. Maybe in a couple of words, just talk about the projects that you have.
Sure. Yeah. Look, I think we have a fairly unique mix of projects up in the Northern Territory. Some 170, 180 k's from Darwin in the Pine Creek region. And our two main projects that we have the Fountainhead Gold Project, and then we have the Hayes Creek zinc gold silver project as well. Both in very close proximity to each other. They're approximately 20 kilometres apart, located on granted mining leases in a really well-known historic mining area.
Absolutely. And maybe if we could just start out with Fountainhead first, because when you look at the numbers around it, it does seem incredibly compelling and almost to the point of head scratching in the marketplace. Can you just talk a little bit about where the project is, what it has on board, and also what does the next 12 months look like for the project? Sure,
Absolutely. So look, Fountainhead is a project that we acquired from our joint venture partner, Kirkland Lake, some years ago. And it's, as I said before, it's located on granted mining leases. We updated our mineral resource estimate on that last year. So it sits at approximately 156,000 ounces of gold currently. We also have acquired more recently a second gold project called Glencoe, which we're in the process now of estimating an updated mineral resource on that one as well. That should be out within the next probably month or so. Very similar, free milling gold. Majority sits within the oxide or in the fresh rock, but it's free milling gold, which is both gravity recoverable and can be leached through a standard gold process. And the third part of that project, I guess, which will also assist us, is that we also hold some gold and silver oxide mineralization at our Hayes Creek project, which we're also looking to incorporate in the sort of the broader mineralized envelope. So really between those three areas, we're talking about a considerable amount of gold and silver, in fact, with which to base our project development scenario on.
Absolutely. And I guess, so we have this 156,000 ounce resource that's potentially upgradable. But also what I think is really interesting is this is not necessarily 4 or 5 years to production. It's a shorter timeline. Can you maybe take us through how we would move from today, January of 2021 over the next 24 months?
Sure. Look, and I think that's a really valid and really important key point. So look, as I pointed out earlier, we have a number of advantages to people, I guess, or groups, companies just starting out. The projects are located on granted mining leases, so we can tick that box. We are, as I said, located in a historic mining area, which means things like water, haul roads. The grid power is literally runs straight past the site, so we're able to tap into that quite easily. We've got existing telecommunications there. You can get mobile phone signals. And as I said, it's about 170 k's from Darwin straight down the Stuart Highway. So in terms of, again, access to ports, access to markets, access to suppliers, it's all relatively simple. And very easy to get to. I mean, as I said, the drive there is an hour and a half, hour and 3/4 from Darwin. So that in itself cuts down a lot of the time that it takes to develop a project. And especially, with modest size projects, and I call them modest size because, the amount that we're talking about in terms of total gold production or potential gold production from these projects, could be in the region of, the target would be somewhere in the region of 30 to 35,000 ounces a year of gold. So, modest size, but for a company like us, that has the potential to generate some fairly significant free cash. I guess the other part of that, in terms of reducing the time to production, is the scale of the proposed processing plant and the availability of fairly standard off-the-shelf equipment, and the fact that the environmental approvals that we require from the government, which in this instance is an environmental impact statement, we are well down that path and should have that submitted very shortly as well.
Absolutely. So the EIS, the environmental impact statement, that would be, I suppose, the next key milestone or one of them?
Yeah, look, correct. So look, I'd hope to have that completed within the next few months. I mean, so we have an environmental impact statement that we need to submit for the project, and then we have our mine management plans, which will allow us to really commence the dewatering process, both of which we would expect to occur later on in the year.
Right. So if we have the EIS, the infrastructure build out, it's certainly possible that you could really be in production, call it within 18 to 24 months.
Yeah, look, absolutely. So I mean, I guess that's within reason. That's pretty much in our control. Obviously, government environmental approvals. I think the risk of us not receiving approvals is low. Sometimes it just, I fully anticipate they're going to be a little bit of backwards and forwards with the government to understand some of the key environmental risks. The second part of that, or the second part of the equation, I guess, that relates to project development will be the broader sort of funding and financing side of things. And clearly that's a milestone that we would like to achieve sooner rather than later as well.
Right, and again, but when we look at the on a simple calculator, call it 30,000 ounces, life of mine, 5 years, 5-6 years time. And that's just one of your projects. And then when you look at the market capitalization of your company, which I think is sitting around $25 million, as I say, it doesn't take an Einstein to figure out there's a valuation gap.
Yeah, look, you're correct. Yeah, correct. Yeah.
And then, and that's before, and maybe, switching on to the additional, can you just talk about Hayes Creek a little bit and what's potential there?
Yeah, look, correct. So, I touched a little bit on Hayes Creek earlier to say that we've identified the potential to source some of the oxide and transitional mineralization from Hayes Creek and incorporate that in the Fountainhead gold development, I guess. But, you know, Fountainhead, or sorry, Hayes Creek really, I mean, we published a pre-feasibility study back in 2017, which is a good read for anybody wanting to have a look at that. But it really outlines a fairly robust project at the time. And keep in mind that metal prices, in particular the gold, have moved fairly considerably since then. So that project at the time, you know, the resource inventory is about 4 million tonnes at around about 11% zinc equivalent, or around about 8.5 gram per tonne gold equivalent. You know, there's just over 200,000 ounces of contained gold there, about 16.2 million ounces of silver, and around about 180,000 tonnes of zinc. And at the time, when we published the pre-feasibility study, again, we'd envisaged a 6 to 7 year mine life, producing somewhere in the region of 40,000 tonnes a year of zinc equivalent. And the NPV and IRR were extremely attractive. And I think if anybody wants to go and sort of have a look in our most recent presentation that we published back in November, just prior to the rights issue, we do a comparison in that between the pre-feasibility prices at the time and spot prices, and the numbers that we used shows a considerable increase in those financial metrics from then to now.
Absolutely. And I suppose, you know, speaking of financing, you know, you're in the midst of a capital raise, which we're proudly here to say at 180 Markets we're going to be participating in. Can you just tell us a little bit about the use of your funds and, you know, what it'll help you achieve over the next coming months?
Sure. Look, absolutely. So, you know, again, we're very fortunate that we were strongly supported in a rights issue that we completed in December, both by our existing shareholders and by new investors as well. So that's fantastic. You know, the majority of those funds have been allocated to the acquisition of the new Glencoe deposit and the various project development milestones that we need to achieve over the next 6 to 12 months. The majority of the funds that we're placing now, being the shortfall from the rights issue, will be directly allocated to near mine and regional exploration. So all of that money is planned to go straight back into the ground again. So primarily gold, but also any other opportunities that we can see, because we have a vast exploration portfolio, some, you know, in excess of 1,500 square kilometres surrounding the Fountainhead and Hayes Creek projects, with a significant number of priority targets that we really, as soon as we can get onto the ground from sort of March onwards, we would aim to be drilling those with those funds.
Absolutely. So you can have drilling going on at exploration drilling going on at the same time as working on something that's, you know, let's just call it much more conservative. It really sounds like a great package of, you know, something that's more, as I said, you know, sure, and something that's maybe a little bit more speculative. But, you know, even if the upside optionality doesn't pay off, the near-term production just sounds incredibly compelling. James, we'd like to keep these interviews short. In closing, do you have any closing words for the audience?
Look, I guess the main thing for the audience is that clearly there are a number of companies out there trying to achieve what we're trying to achieve, and you know what makes us different. You know, I think we do have a compelling mix of metals. We have a natural hedge against variations in these individual commodity prices. As I said, gold, silver, and zinc. We've seen significant increases over the last sort of 12 to 24 months, not just in the price of those commodities, but also our increasing resource base and the strategy for development. So, you know, please make the time to have a look at PNX and our projects, and would welcome you on board if you'd like to become shareholders.
Great. Thanks, James, and please stay in touch.
Will do. Thank you very much.
Thank you for watching another presentation by 180 Markets. Don't forget, if you want access to thousands of ASX capital raises, head on over to 180markets.com.au, sign up, and get on board for our very next capital raise. Thanks for watching.